Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Did you know one semiconductor chip consists of tens of billions of transistors? Semiconductors form the foundation of the digital economy. As we enter the AI age, semiconductors are going to be an important driver of future growth. Join us this Saturday where we break down the complexities of manufacturing a semiconductor chip, take a history lesson in the growth of the industry, and understand India's role in accelerating the industry's growth.
In this video, I'm going to talk to you on the topic thinking longer term. Generally, when an advisor says, please think longer term, most investors tend to be quite suspect about it. The reason is they think that the advisor is telling them to think longer term because of his interest alignment. But let me wear the hat of an investor and tell you something. In every bull market, in every market context where valuation in one part of the market has been elevated, there is another part of the market where valuations are reasonable and tend to become more attractive because the market doesn't want to look at that side of it. So, you should take a unipolar view of the market because there are many sides to a market. So, you take that side where opportunities are interesting. So, if an advisor is able to show you that side of the market where you can participate and you can increase your participation going forward, you can think longer term, and by virtue of thinking longer term, you will invest earlier than others in that part of the market, I don't think you should be unresponsive to that idea. I think you should be open to that idea. This market is no different from earlier markets. In 2014, when there was a regime change, you first saw an index level rise in the market, but many of us were more focused on the small cap. In 2018, you saw the small caps at the peak, but there were other parts of the market like infra, which were interesting parts. Today again, in 2023, you are seeing the mid caps in a zone where it's difficult to justify their valuation. You are seeing small caps in a zone never seen before in the history of Indian small caps. And you are seeing larger, well-established businesses trading at just about slightly elevated levels. So, I don't think the large cap universe is actually trading at expensive valuations as a whole. There are parts of the large cap universe like IT where we could see valuations get derated, but overall, they are not in a place where the comfort is inadequate. There is enough comfort to invest. But look at what investors are doing. Most money is traveling out of large cap. Most money is traveling into small and mid cap. And all you need to do is to think longer term, understand that this economy will grow at a reasonable pace, and the place to put money, which could be safest from a downside point of view, is large cap. So, if you start thinking longer term, you start seeing risks more clearly and you start seeking opportunities in places where the risk reward will turn faster in your favor. If you do the same thing in small cap or mid cap, the risk reward will not turn faster in your favor. In fact, it will first turn adverse, remain adverse for some time, and then gradually start turning in your favor. Now, that's a long gestation. And the amount of long-term thinking you need to do, I don't think most investors are mentally ready to live up to that expectation. So, it's easier for the investor to go into a place where the gestation is not going to be unreasonably long, the risks are moderate, and if you see downside in the interim period, you can continue investing without doubt without self-doubt, and without doubting your strategy. So, you need to have that confidence which you retain during difficult days. Thinking longer term today is not an option. Investors must think longer term. When you think longer term, you start seeing equity opportunities better. You start seeing risks more clearly. You start aligning your portfolio to what your risk appetite is. You start seeing opportunities in debt better because debt markets could, top out and give you some very interesting opportunities in the next 12 months. You start seeing gold better. Gold is a hedge towards a lot of things happening outside, and whenever it comes down, taking some exposure to gold can improve your asset allocation. You start seeing other commodities better. You start seeing global investing much better because sometimes we are in a peculiar situation where investing in another country offers better opportunity than investing in India. A lot of people went into the Nasdaq and FANG's universe after the COVID crisis hit us, and they made very good returns when the global markets recovered. So, such opportunities keep coming at us. And when you are thinking longer term, you do one more important thing. You avoid trading. You put your money only with an investment orientation. That in turn will help you deal better with yourself when the markets correct or when valuations come down more in your favor. Recency bias is something which you need to eliminate, and the only way in which you can eliminate is by thinking longer term. I know a lot of people tell you, look at small cap for 10 years. That is not what I mean when I say thinking longer term. Think in a way in which you don't see crazy drawdowns because you invested at expensive valuations. Those who bought at any price, the BAAP investors, are suffering not because they bought the wrong companies, but because the way in which they invested is wrong, which is buying at elevated valuation without respecting the need to be disciplined in dealing with valuations. I think that we saw BAAP investing in 21-22 in large caps, and there is pain today. We are seeing BAAP investing in small and mid caps in recent times, and we are going to see the pain going forward. So, it's important for an investor who is thinking longer term to factor these mistakes and try and avoid them, because if you avoid them, that itself will give you better ownership experience in equity. That itself will give you confidence to invest more in equities when the markets give you more attractive valuations to invest into. And you would be able to scale up your equity to the desired levels within your overall asset allocation if your frame of mind and choice of investment areas are correctly aligned. So, get that alignment right. That is what thinking longer term means, and make sure that you are always prepared to invest on a rainy day, because there are going to be many in the coming months. Thank you for watching this video.